This is Warren Buffett. And for those that don't know Warren Buffett, he is known as one of the best investors of all time. And here's the list of his top 10 stock holdings as of our last update on June 2024. And like you can see, he sold just over 49%, that represents 389 million shares of Apple. So doesn't he like the course that Apple is taking? Or is it bigger than that?
People have speculated on how I've decided to really put a lot of money into Apple, and for a reason, and then crystallizes your thinking into action, big action in the case of Apple. And there actually is something which I don't mean to be mysterious, but I really can't talk about. But it was perfectly legal, everything, I'm sure of that. But it just happened to be something that entered the picture that took all the other observations, and I guess my mind reached what they call apperceptive mass, which I really don't know anything about. I know the phenomenon when I experience it, and that is. We saw something that I felt was, well, enormously undervalued.
So there's just something that entered the picture that took all the other observations, rather than a lack of confidence in Apple itself. So what could that be? Therefore, there is another interesting thing. And here's a snapshot of Warren Buffett's Berkshire Hathaway top 10 holdings as March 31 of 2024. Now let's rewind a bit to December 31, 2023 and look at those same companies. What is remarkable to see is that out of the 41 companies in Berkshire's entire portfolio, is that these 10 top holdings make up a 90% of the total value. And as you can see here, he hasn't really been adding anything to this list over this year. So Warren Buffett is selling a lot of his positions. The main question here is why? Why has the world's best investor turned into a massive seller of stocks and stopped buying? Is he anticipating a market downturn that the rest of us might be overlooking? In this video, we are going to take a deep dive into two possible options why Warren Buffett has been selling his stocks, and if we can possibly expect a stock market crash soon. So Warren Buffett is a value investor who favors proven business models. He chooses reliable companies he can hold for the long term, meaning he only buys stocks when he feels as though he's getting the shares at a fair value. And an important part is that he doesn't believe it's possible to time the market.
Charlie and I don't think, in all the time we've worked together, and I'll tell you something later on maybe about how learning takes place, but we have never, I don't think we've ever made a decision where either one of us has either said or been thinking we should buy or sell based on what the market is going to do.
No.
Or for that matter, on what the economy is going to do. We don't know.
With this in mind, the biggest reason by far that Warren Buffett has been sitting on the sideline across the last few years is because what he has said is a lack of opportunities due to an expensive market. See this video.
We only swing at pitches we like, and if anybody tried to swing at every pitch, or felt that because they hadn't swung at a pitch for the last two pitches, they ought to swing at the third one or something like that, it got a hunger strike or something like that going on. It's just that things aren't attractive. Well, there are certain ways that can change, and we'll see whether they do.
Take a look at the S&P 500 today. It's reaching practically all-time highs time after time. The Shiller PE ratio tells a similar tale, hovering around 37 when historically it should be between 18 and 20. In essence, the stock market is sizzling, and this environment poses significant challenges for value investors. So rewind to 2019. long before the pandemic reshaped our world. And you will find Warren Buffett expressing similar concerns about the scarcity of great investment opportunities. He noted, in the years ahead, we hope to move much of our excess liquidity into businesses that Berkshire will permanently own. The immediate prospects for that, however, are not good. Prices are sky high for businesses possessing decent long term prospects. We continue, nevertheless, to hope for an elephant sized acquisition. So, even back then, he was struggling to find serious investment opportunities, and Buffett said Berkshire Hathaway had over $112 billion in cash at the end of 2018. For someone like Buffett, market overvaluation has much greater impact than it does on individual investors, largely due to the size of Berkshire Hathaway. When he is aiming to invest $10 billion or more, his options become significantly limited, as he noted himself.
But I would say this, I would not like to be running 10 billion now. 10 million, I think Charlie or I could earn high returns on, because I think there are just a few things that happen on a very, very small scale. But if we had 10 billion, we wouldn't. I wouldn't basically see many more opportunities than we found out.
So here you see the Berkshire Hathaway letter from this year, which said the following interesting thing, and that is, there remain only a handful of companies in this country capable of truly moving the needle at Berkshire, and they have been endlessly picked over by us and by others. Some we can value, some we can't, and if we can, they have to be attractively priced. Outside the US, there are essentially no candidates that are meaningful options for capital deployment at Berkshire. All in all, we have no possibility of eye-popping performance. So Warren says the following about the real reason behind this.
There have been times in my life that I've been awash in so many opportunities that I could have invested everything by nightfall. And then there's other times when the year goes, well, not in the early days, but now, we just we haven't seen anything that makes sense, that moves the needle. Now, we've made small acquisitions during the year. Our companies have made acquisitions, and this is not a time when the phone is going to be ringing off.
So there is a real reason behind Buffett's recent decision to acquire fewer large positions. While the market is indeed overvalued, he also faced a very limited selection of viable options. And therefore, Berkshire Hathaway's cash and US Treasury holdings rose to a record high in the second quarter at $276 billion. What is Buffett waiting for? And why hasn't he deployed at least some of his cash reserves? So the primary reason behind the growing cash reserve is the scarcity of investment opportunities. However, there's another significant factor at play that Warren discussed: Treasury bonds. And this is where it gets really interesting. This is what Greg Abel said, the CEO and chairman of Berkshire Hathaway.
And then we'll obviously have our continue to always put excess cash in the safest investment there is in U.S. Treasuries, knowing we want to maintain that fortress of a balance sheet for two reasons. One, to act, but also to always protect our shareholders. If we want to maintain the position Berkshire is in now, realistically, to ensure it endures.
Well, when he says that, it makes me wish I'd stayed around to be number 2 instead of number 1 in this process over the years. It doesn't get more fun than what we're doing, and we're better positioned than ever before.
So what you end up with is getting investors or even companies like Berkshire Hathaway that have cash piling up, keeping their money invested in short-term US Treasury bonds. For decades, investment in government bonds hasn't been particularly rewarding due to low interest rates, which meant minimal returns, right? And therefore, back in 2020, when interest rates dropped close to zero, investing in bonds was almost pointless because inflation was making your money worth less. But today paints a different picture, with short-term US Treasury bonds having significantly higher returns. As you can see, the current yield on the 3-month Treasury bond is about 4.6%. And this increase means that keeping cash on the sidelines isn't as costly anymore as it was before. So you can sit back and relax knowing your money isn't just losing value while you look for better investment. And this is the reason why you have to check out this chart. Here you see the cash on hand that Berkshire has maintained over time. As you can see, since 2022, they have nearly tripled their investment in treasury bills, rising from $100 billion to $276 billion. And that's due to the substantial increase in returns on these treasury bills as illustrated in this chart. You can clearly see that the yield has risen significantly from 2022 to now. So that's the second reason why Buffett hasn't been buying stocks over the past year or so. While we noted earlier that Warren Buffett isn't a market timer, he currently has a significant amount of cash on the sidelines due to lack of attractive investment options. So it's not just about timing the market, it's about not doing stupid things in overvalued markets. Buffett sees the overvaluation of the market but isn't worried about holding onto substantial cash reserves. But the question is, how long can he maintain his strategy? While he effectively minimizes risk at this time, he also positioned himself to seize significant opportunities if market disruptions arise from the current global situation. However, it's important to know that market trends upward 75% of the time, which means he could miss out on substantial gains over the long term, what you can see in this video. In this video, I will tell you everything about market returns on the long term, and that is much more than the 4.6% that Buffett is getting on his treasury bills. So I would love to hear your thoughts in the comments below. Does Warren Buffett anticipate there's something ahead, or is he just waiting for another opportunity? I see you in the next video.